Let me put my volume down. All right, guys, how's everybody doing today? Throughout the presentation, I'm probably going to be trading in the background if there's a good trade. And what I'm going to teach you guys is how to learn how to beat the hedge funds in the long term using what I call unusual option activity. So it's a very interesting concept. I've been trading for it. Does everybody see my screen? You have to go to the screen sharing on the top. You click screen sharing on the top, not the slides. All right, cool. So I'm going to teach you guys how to trade unusual option activity. I'm going to show you guys a couple really cool free websites if you want. I use a proprietary based scanner. So this scanner shows me every single equity option trade across every single exchange. I'm going to teach you guys how you can use that. Today I'm going to teach you my proprietary base trading plan. It's called the Oak Ribbit Trading Plan, OCRRBTT. So sit back, relax. If you guys have any questions throughout the presentation, feel free to ask questions. I do talk a little bit fast. The reason I talk so fast is so I can give you guys a lot of information that you can use in your trading. I'll be your presenter today, Andrew Keene. Seems like a decent amount of you guys already know who I am. And past performance is not indicative of future results. The most exciting slide, not really, but we have to put a risk disclaimer in here in every single webinar. Day trading, short-term trading, option trading, and futures trading is extremely risky. They are generally not appropriate for someone with little capital, little to no trading experience, and low tolerance for risk. Never execute a trade unless you're willing to lose your entire investment. No trades are recommendations or advice, and we cannot be sued for losses of capital. All trades are for educational purposes only. Contact your broker, registered investment advisor, for execution, margin, and other capital requirements. Everybody today watching today's presentation adheres to all risk disclaimers on www.optionhacker.com and www.alphashark.com. Simple and easy, guys. I trade on my own account. Everything I make, everything I lose is my own capital. I do not have capital from any investors. I am not registered at all. Do not have a 7, do not have a 56, do not have a 63. So I cannot tell you how you guys should trade your own capital. I can just offer you my opinion and tell you what I'm looking at and how I am trading and how I've made money over time being as a profitable trader. So this is me here. I studied at the University of Illinois, Champaign-Urbana. This is actually me in here, me in the middle. This is actually not me on the right. I don't know why everybody thinks it's me. On the left here, this was actually Humpty from Digital Underground. He kind of got cut off in this picture. Let's draw his hair in here, put his eye. So this is when I was really young. At this time, I was 20 years old. Okay. Well, I was just a young buff kid, and now I'm 36. So 16 years ago, this is before I ever traded. I consider myself to be a decently smart person. Illinois is a pretty good school, but I've never wrote any programming. I've never wrote any coding. I didn't go to MIT. I didn't go to Harvard. So, basically simple and easy, guys. If I can become a profitable trader, then you guys can become a profitable trader too. Because to be honest, it's not how smart you are when you trade, okay? Trading is all about probability, math, risk versus reward setups. And I've been able to be profitable over time. And I think you guys can too. I'm not don't need to write codes. You don't have to go to the best school. One of the great things about trading is everybody is the same, right? No one has an unfair advantage by being smarter than someone else or being able to write code or anything like that. And I just want to teach you guys the ways that I've been profitable over the last 14 years. So now I live in beautiful, sunny San Diego. I trade from my condo. I have 4 monitors and a computer. This is my view of my condo. I was from Chicago. I lived in Chicago for like 14 years, and I said I needed a change of pace. I said, San Diego, it's sunny. Sure, let's go out there. So I went to San Diego. I got myself a car with my trading profits, nice little BMW convertible, and I'm a regular guest on CNBC, Bloomberg, Fox Business, BNN Canada. I was also a floor trader at the CBOE. This is actually a funny picture because oil was $90. I wish oil would go back up to $90, but it's not $90 anymore. I do CNBC hits about 3 days a week. I actually have one today. So I contribute to them a lot. And I like trading. I like teaching. I like educating. My goal is to help more people become profitable. So hopefully I can teach you guys. So we have a problem, okay? There's a reason that you guys are at a webinar today, and the reason that you're at a webinar because you probably are not making as much money as you want, right? In trading, the goal of trading is to make the most amount of money possible. That is it, okay? We're not trading here to save the manatees. I will save the manatees one day, but it's not going to be today. So, unfortunately, 90% of all traders lose money. And if you think about it, and I've talked to a lot of brokerage firms, and the average shelf life of a trader is somewhere between 1 month and a year and a half. And the goal is to make more money, right? That is my goal, is to make more money trading. And I'm going to teach you guys the ways that I've been successful. I'm going to teach you guys my proprietary-based trading plan today to help you guys understand and learn how I've been profitable throughout the years. And I want to teach it to you guys, okay? So 90%. So if there's 100 people here, hypothetically speaking, only 10 people would be profitable. The rest of the traders would be unprofitable. Reasons for this: number one, improper or poor reward to risk setups, okay? If someone came to me and said, hey, AK, I want you to have 95% of my trades to be winning trades. I want to give you $10 million. Well, first of all, I couldn't take it. But second of all, I'll say that's pretty easy, okay? You guys got to stop thinking about what percentage of your trades are winners. Because to be completely honest, it doesn't matter. The only thing that matters is how much money is going in your account at the end of the day. Are you making more money than you're losing, okay? So stop thinking about percentage of trades that are winners and think about dollar amount, okay? I've been a profitable trader every year since 2009 was the last year I lost money. I am currently down money this year. This has been a pretty rough year for me, but I think I'll be able to get it back throughout the rest of the year. So 90% of all traders lose money. Who makes all the money? Institutions make the money. Why do they make money? Okay. Why are they constantly outperforming the market? And we're going to just explore that today in today's webinar. So here's a couple pictures of 3 people you guys might know. If you don't, I will tell you who they are. Number 1, everybody should know Carl Icahn, activist, one of the smartest guys. Historically has been beating the market. He does have big bets on right now that are not doing very well in FCX. He has some LNG. But he made a lot of money in Netflix. Bought it at $80. Sold it like $800. Then we have David Einhorn of Greenlight Capital. And then we have Pershing Squares. I'm sure you've seen this guy. So this guy has a big position in Micron. This was the Herbalife short and also in VRX. Okay, so these hedge funds, these hedge fund managers constantly outperform the market. And you say to yourself, how can they always outperform the market? Okay, why are they smarter? So throughout the course of the day, I'm not coming up with my own trades. Okay, why would I want to come up with my own trades? I'm just watching institutional order flow to figure out who the biggest and best traders in the world. And I'm going to show you guys an example of a trade I put on today that I made $1,400 profit in about 10 minutes, okay? So I'm not the one creating all these trades. Like I said, guys, we use this proprietary-based scanner, and I just watch the biggest traders in the world placing bets on the option market, okay? Using unusual option activity. I'm watching the best traders in the world. I'm taking their ideas. So even if they are trading on insider information, okay? I actually want them to be trading on insider information because all of those orders become a public order and I get access to that, and then I can allocate my capital or my trading based on what the biggest and best traders in the world are doing. So why do we care about unusual option activity? We care about unusual option activity because institutions have more advantages than we do. They have access to information, technology, and capital that we do not have, okay? So like I said, guys, and this all started back on the trading floor. There was a institution that used to sell us Apple put spreads, okay? So there's an institution that would come in and on average about once a week and sell Apple put spreads. Every single time that they came in and sold us Apple put spreads, the stock would rally. And I said to myself, how can this guy be so smart, guy or girl? How can they know that every time when Apple's going to rally? So then I started thinking about it. And the institutions just have access to technology that we do not have. There's so many examples, and I'm going to show you a couple examples today of, an institution coming in, buying calls, and the stock moving higher, okay? So how do they know they're going to get it, taken advantage of? And the greatest thing about this, guys, is due to the fact that, they don't have enough manpower to go after every trade that goes across based on unusual option activity, okay? They don't have the manpower. They don't have the OCC, and the SEC doesn't have manpower, so we can use this to our advantage. We're using technology and information that other traders are not privy to in the option market. To what? The goal is to make more money. There are dark pools in stock, okay? There's algorithmic trading. If you're trading futures, stocks, or Forex, and you wonder why you're not making money, there's a simple and easy reason why you're probably not making money. Because there's algos that trade against you. If you think you're better than a computer-based program, good luck with that. Because this is not going to happen, okay? The computers are smarter than us. But trading unusual option activity in the option market, there could be something called a bluffing mechanism involved. And this is why I'm going to teach you guys my trading plan today. So what is unusual option activity? Every single stock has usual volume in a day. Okay? So let's say, someone give me an example of a stock. Someone give me an example of a stock. Apple, Facebook, good. Facebook, okay? So Facebook, normally trades, okay, 60,000 calls in a day, 38,000 puts, and about 100,000 options total. Okay, so we see that there. It trades 60,000 calls, 38,000 puts, and then about 100,000 options total in a day. Okay, so it trades 100,000 options in Facebook daily. So let's write this down real quick. So Facebook, oops. Let's get a different color because I've been using green a lot. Let's use blue. So Facebook usually trades 100,000 options in a day. If today it traded 300,000 options in a day, that would be known as 3.0 times usual volume. Okay, if it's not unusual volume, it is known as unusual option activity. If you guys watch CNBC, you watch the Nigerians, they're on the halftime report and they're on Fast Money, and they talk about this a lot, right? Using unusual option activity to their advantage. They say, hey, an institution came in and bought calls and the stock went higher. Okay, I can show you an example today in a couple minutes of a trade that I put on an ETP, and today on one single trade, okay, and I only bought 50 of them, which is not a big order, I made $1,400 profit today, okay? And I did this in front of all my subscribers live, and I'm going to teach you guys the way that you can potentially get these profits. So, what kinds of stock have unusual option activity? There are 4,000 actively traded equities on the New York Stock Exchange and NASDAQ. 15,000 of these trade off major exchanges. I will trade any stock possible that represents a good opportunity for me to trade it. Every stock has usual volume. It trades in a day. So I'm looking for something that is known as unusual volume or unusual volume activity. We just saw like Herbalife. I just saw some February calls trade here. February 55s. They do have earnings coming up. and we saw some bullish activity. I'm going to show you the trade I put on an ETP today. So if it's not usual volume, it is known as unusual volume. So we're taking advantage of the biggest and best traders in the world, and we're trying to mimic their positions. It doesn't necessarily mean it's always going to make money, okay? But this is putting math, probability in your favor, okay? You know, think about anything, and you know, anything in life is all based on probability and math. Let's say I like to play basketball. So I go to the gym with my buddy, and he looks at me, he goes, "I'll bet you $100 I can make a half-court shot." And I say to him, "You're on." Because I know the probability in math of him making a half-court shot is not 50-50. So I say to him, "Okay, I'll bet you money that you cannot make a half-court shot." And I bet him $50. And guess what? I win, right? But then we go to the gym 2 weeks later, and he says, "Hey, I think I can make a half-court shot." And I said, "Okay." He goes, "But I want 50 to 1 odds. Your 100, my 100 against your $5,000. And you say to yourself, whoa, that's not a good deal for me. That's a bad bet. The probability in math is against me. So when we're trading, okay, and I can lose money in a day, I can lose money in a week, sometimes I lose money in a year. Thankfully, I haven't done it since 2009, but it's all about probability in math, guys, okay? Is there a better chance that the stock goes higher, or there's a better chance that the stock goes lower? So when I'm trading, all I'm trading is probability in math. Bets over and over. If you go to Vegas, there is a reason why the house has 7 in craps. Because 7 with 2 dice will come up more than any other number. Okay? So there's a reason that Vegas has that number. Because the probability in math is on their side. Okay? So we're taking all these factors into consideration, and then we're going to come up with a trading plan today, and I'm going to teach it to you guys. So why is unusual option activity the best way to track big money? Okay. Number one, there are no dark pools in the option market. So every single trade that goes across the tape on a daily basis, I will see. There's dark pools in stock. If you guys have read Michael Lewis's book, Flash Boys, dark pools were created to basically trade against the algorithmic trading. Okay, so there's no dark pools in the option market. Anything that trades, I will see. So the way that it comes up with is the institution, or we call it big money or the smart money. They're in a room, and then they say, "Hey, I think the stock can go to here for X, Y, Z, or C advantage." So the institution will create an order based on research, information, and analysis. They will call their broker and say, "Hey," and we'll show you a couple examples of these. "I want to buy 10,000 calls on XYZ. Every option is the right, but not obligation, to buy 100 shares of stock. Every put is the right, but not obligation, to sell 100 shares of stock." So they say, "Hey, I want to buy calls. Where can I get filled?" Then they will call Citadel, Goldman Sachs, Barclays Bank, and they will say, "Hey, I got a customer that wants to buy 10,000 calls. Do you want to sell them?" Then it goes to the trading pits in Chicago and in New York, maybe Philadelphia even, and the trade will get executed. Once it is executed, then it becomes a public order, and traders like myself can act on this information. And before we go forward, let me show you a couple sites where you can get all of this information for free. So let me bring up 2 sites here. Okay. One of them, like we talked about with the Nigerians, is Option Monster. They have their own site, is 100% free. Okay. And they talk about unusual option activity. So here's an article, here's an article, here's an article, and we see a lot of trades in here. So you can click on the article and you can see, and they talk about it. A trader bought 3,300 FFIV, February, 92.5 puts for 232. Okay, So we're going to teach you guys how you can read this order and figure out if it's a possible good trade setup for you, okay? So this is 100% free. The only problem with getting some of the information on a website like this is it's delayed about half an hour, because it's going to take you about, it takes about half an hour to write these articles. This was another trade, and I didn't put this trade on, but yeah, it is a pretty big delay, but it's free, okay? So it is free. This is SSYS. We saw bullish activity in that one. So optionmonster.com, you guys can write down that website. And the other one is the optionsinsider.com, okay? The optionsinsider.com. So the other one is the optionsinsider.com. That's another one where you can get this kind of information, okay? So you can get this one, and same thing, guys. It is delayed, but it is free. So if you're looking for it, I pay for a scanner, and I pay about $300 a month for this scanner, so I can get all the activity in real time. But if you guys don't want to pay, I just want to give you guys a couple free sites where you can go for free, check out the unusual option activity. I'm going to teach you guys my trading plan, where you can get, figure out if these trades are a possible viable candidate for your trading style. In the course, we're going to teach you, how to use stop losses, how to use targets, because we always say it's important to get on the plane, but it's always more important to get off of the plane. So entries are always really, really important, but exits are more important. Okay, so this is an example here of a trade. And we see here, this is Boeing. So a trader came in and bought 3,735 Boeing BA December 147 puts for 55 cents. This was an opening position. Okay, so the most important thing I look at right here is, number one, volume is greater than open interest. So volume is how many options trade today. Open interest is how many options exist before today. So the first thing I look at is the volume versus open interest. So 3,735 BA Boeing December 147 puts were bought for 55 cents. So the volume is greater than open interest. It is an opening position, which is really, really important to me. So let's go through everything that is important on this order, okay? So trade size 3,735 Boeing. And I'm not creating this order. I'm not the one coming up with it, but I announced this trade live, and a lot of my subscribers got into this trade and made a lot of money on it. So a trader bought 3,735 BA Boeing December 147 puts for 55 cents. This is an opening position. We see trade size. We see the symbol. We see expiration. We see the strike. We see the type. We see the price traded. Timestamp shows if it's an opening or closing position and where the stock was trading at the time. So this is an example of an order that I watch and I see during the day, and then I decide if I want to allocate some of my capital and take the exact same trade as the institution. Let's move to the next slide. Well, this is where they bought puts. So a trader came in and bought about $200,000 worth of puts here, okay? So they bought $200,000 worth of puts here. Let me get the arrow back out. So right here, a trader came in and bought $200,000 worth of puts. Why would they buy $200,000 worth of puts? Well, simple and easy. They thought the stock was going to move higher, okay? So let's see what happened then. Did the stock actually move higher? I mean, sorry, they thought it was going to move lower. We see we see a head and shoulders and a rounding top. What happened to Boeing? Boeing sold off by over 4%. So Boeing sold off here 4.11%. And that day, these puts went up to $7.85. Okay? So these puts went from 55 cents to $7.85. And there's so many examples of this happening on a daily basis. Let me show you one that I did today with my own capital, and I netted $1,400 profit, and a lot of my subscribers got into this trade. So we saw one in an ETP earlier today. So a trader came in and bought ETP. Let me bring it up. They bought the Feb 26 calls. Okay. Let me find this order real quick. So a trader came in and they bought the February 26 calls in ETP for $2.10. And this is a real example of a trade that happened today. Okay. So they bought these for $2.10. So me, being the smart trader, I said, hey, I'm going to buy some of these as well. Okay. Look where these options are today, guys. Right now, they're up to $3. I bought 50 of them. Okay. And now that 50 lot has profited me $1,400 in profits on a 50 lot. As we see here, I have no position on. Okay. So this was an example of a trade that I saw using unusual option activity today. Bought calls, sold them out. I actually could have made more money because they went up to $3. I sold them as high as $2.60. No position on, and this is cash in my pocket. Okay. No trade is technically a winner or loser until it's closed. These options have a mark-to-market count. That is cash in my pocket. Cash in my pocket. So this is just a perfect example. Go back to this trade here in Boeing. Okay. We see in Boeing, stock sold off. Hypothetically speaking, if I bought 20 of these Boeing puts, first of all, I could have used a stop loss of a 20% stop loss. We'll talk about that a little bit later, how we can use stop losses for beginner, intermediate, and expert. But if I bought 20 of these puts in Boeing based on unusual option activity, based on the Oak Ribbit trading plan I'm going to teach you guys today, I could have netted $14,600 profit just on this one simple, easy trade. Okay. This is another example. This is in PMCS. Okay. And look at this order, guys. And this is an exact trade. We actually, you can tell, we copy and paste it straight from the scanner. A trader bought 14,726 PMCS January, 7 calls for 85 cents. This was an opening position. So what have I taught you so far today? What is important? The volume versus open interest. Okay, volume is 14,000. Open interest had only on 318 contracts. So the volume was 14,000. Open interest was only 300. Opening position, that is very important as well. So some traders coming in here saying, hey, I think PMCS can move higher, and they bet $1.2 million on this trade. Okay, and a lot of my subscribers got into this trade. I was in this trade. And then let's see what happens after the institution buys these calls. Wow, look at this. Okay, you didn't hear anybody getting in trouble for insider information in PMCS, but the institutions have more information than we do. Okay, the calls were bought right here. These calls went from 85 cents to $4.70. PMCS was to be acquired in an all-cash deal, and the stock gapped higher. These calls exploded and traded as high as $3.33, meaning this trader made $3.6 million on this trade. I will repeat that. This trader made $3.6 million on this trade in 2 trading days. If a trader would have bought a 20 lot of these and risked $1,700, you could have profited $4,900. Okay? How does that sound? You know, only risking $1,700, buying a 20 lot, and it profits to $4,900. Now they're trading as high as $4.70. So just another example, and I could sit here and I can show you example after example after example of unusual option activity trades, but we don't have time for that. I don't want to show you them all. So why take these trades? The hedge funds and bigger traders have more information than us. That is why they're always getting in trouble for insider information. Trade with the pros. Imagine knowing all Carl Icahn's and David Einhorn's positions before they are disclosed to the public. And most importantly and best, all trades are public information. Okay? All trades are public information. So, how do I take advantage of this? I need a trading plan in place. I need to know if a trade is a speculative bet or it's a hedge bet. Whoa. Oh, my sound went off. Actually, the room froze on me. So let me just repeat this. Okay. So why take these trades? The hedge funds and bigger traders have more information than we do. They have access to technology that we do not have. That is why they're always getting in trouble for insider information. Trade with the pros. Imagine knowing Carl Icahn's or David Einhorn's positions before they are disclosed to the public. And best and most importantly, all trades are public information. Okay? All trades are public information. So, how do I take advantage of this? We need a trading plan in place. I need to know if the trade is a hedge or a speculative bet. I need to know and put probability and math on my side. So we have developed a trading plan to address these issues, and today I'm going to share it with you. I call it the Oak Ribbit Trading Plan. You can take out your smartphone. You can take a picture of this if you want, but it's called the Oak Ribbit Trading Plan. So I can take any single signal that I see on Option Monster, the Options Insider, or if I have a proprietary based scanner, and just go through this simple, easy process of the Oak Ribbit Trading Plan so I know. Because when an institution buys calls, they are not necessarily buying calls to get long. It's possible they could have a short stock position on against it. If they're buying puts, it's possible that they could have a long stock position on and they're just protecting themselves. So I always want to know if these trades are speculative or a hedge. So this trading plan that I've created for you guys will help you guys in your trading very, very much. So it's known as the Oak Ribbit Trading Plan. OCRRBTT. As I said, the first thing I always look at is option volume versus open interest. Option volume versus open interest. I always want volume to be greater than open interest. Then I look at the chart. If there's bullish activity and calls are being bought, I want to make sure it is a bullish chart. If there's bearish activity, I want to make sure the chart is bearish. So I want to first put, volume versus open interest. Only if that one is criteria field is hit can I move into the next one. And the next one is volume versus is the chart. Then I look at R&R. Some people like rest and relaxation. I prefer a reward to risk setup. Okay? So how much am I willing to risk on a trade and where are my exits? Okay? So how much am I going to risk? And I can do that one of two ways. I can do it number one, is I can do it as a dollar amount. Okay? Or number two, a percentage of my total book. So dollar amount. Maybe I want to say 1% of my book in this trade. A percentage of funds. Okay, so reward to risk setup, and we're going to walk you guys through a couple examples here. Then break even. On expiration, where will I break even on this trade? And then TNT. Tacos and tequila actually started in San Diego, but more importantly, time and target. There's basically two simple ways to trade: day trading and swing trading. And in the course, we're going to teach you the difference between day trading and swing trading. Because there's certain trades that I think that are good trades to day trade, and there's certain trades that I think that are good to swing trade, and we're going to teach you that. Okay? So make sure you guys get a picture of that or write that down. Oak Ribbit Trading Plan. So this is an example of Boeing. Now that we have our trading plan in place, let's go into Boeing and see if this is a possible trade setup. Trader bought 3,735. BA, Boeing. December 147 puts for 55 cents. First thing we always talk about is I look at the option volume versus open interest. So is the volume greater than the open interest? Volume 3,735. Open interest 575. So the answer is yes. The first step of our trading plan has been met. The volume is greater than open interest. Then and only then can I go to the next part of it, which is the chart. Okay, I prefer Ichimoku Kinkin Hoi. You can use any strategy you want for trading using the chart. Okay, so use your own charting, but we want to make sure it's a possible bearish setup. Once we know volume is greater than open interest, we want to go to the next step, which is the chart. So let's go to the chart here. Actually, we don't have the chart. We would have to go back to that chart. We can go back though. Maybe it's this one. Okay. So this we can tell if someone said it very properly. This is a head and shoulders top. We can see it doesn't look like we have resistance up there. A huge bearish candle closes on the absolute low of the candle. So there's probably going to be more follow through to the downside. If we combine that possible downside follow through with the fact the chart that the unusual option activity lines up, this is a bearish setup. Okay, so volume is less than open interest. Sorry, volume is greater than open interest. That's number one. Then the chart is bearish. Then and only then can we go into a trade and put a proper reward to risk setup. So we go in here and we say, hey, what kind of trade can I put on? Well, I'm pretty simple and pretty easy. I just follow the institutional order flow and mimic their positions. So I just put on the exact same trades as the institution. So hypothetically speaking, I could have bought 20, just a 20 lot, guys. It's not a big order. BA, Boeing, December 147 puts, and I would have been risking $1,700 on this trade. Okay, so I would have risked $1,700 because 20 times 85 cents times 100 is $1,700. Also keep in mind stop losses, okay? What would be a fair stop loss? We always talk about using a 20% stop loss for a beginner. So if I came in and I bought 20 of these, let's say I paid 55 cents. Oh, sorry, I would have only been risking $1,100 if I bought a 20 lot. So if I had a 20 lot and I bought them for 55 cents, let's just say I use a stop loss of that 20% that I just taught you. You could have a stop loss at 45 cents. So on this trade, I'm really risking only $200. Does everybody understand that? And it would have paid $18,000 of profit, okay? Just on this one trade. So we always talk about it. A beginner can use a 20% stop loss. Intermediate can use a 50% stop loss. And I personally don't use any stop losses. But it's much more important to understand your risk, okay? Risk is more important than your potential reward. Good traders think about how much money they can make. I am a great trader. I think about how much money I can lose if I am wrong. Okay, so $200 I could have risked on this trade. Would have paid it $18,000 of profit. And make sure you guys, this is a standard one we like to give a lot of our traders. Stop losses, beginner, intermediate, and expert. Time and target. Okay, there's two types of trades for unusual option activity. there's day trading and there's swing trading. Okay, some of my positions are day trades, some of them are swing trades. In the course, we're going to teach you guys how do you know if it's a good potential setup for a day trade and how it's a good potential setup for a swing trade. Because you always want to make sure some trades are good for day trades, some trades are good for swing trades. So always have that proper time and target, which is so important. Like I said, some people like tacos and tequila. I prefer time and target. So I let our customers and our subscribers, kind of speak for themselves. We have one of the biggest subscriber bases, and I started my company about 4 years ago. A couple testimonies from our subscribers, and then we'll talk about the course, and then I'll leave it open to questions. Charlie said, I want to take this opportunity to thank you for sharing your trading experience. Having joined your trading room a couple of weeks ago, I made $27,000 in KRFT this morning, thanks to unusual option activity plan you taught me. And these are all straight from our subscribers. So these are all quotes from our subscribers. I've got an inbox, with hundreds of testimonials. Matt said, as a new options trader, I logged into the seminar about unusual option activity in August. My first week generated over $1,000 of profit. Just yesterday, one trade delivered over $2,000 of profit. Steve says, it helps to stay in a trade to maximize profit, helps on reversals, and this was just my first day. Wish I had this 29 years ago. I recommend this to everyone. Great job, your team deserves kudos. So, we are going to offer you guys a course today. You might say, hey, who is this course good for? This course is good for any beginner, intermediate, and expert trader. A trader who wants to have financial freedom, stop worrying about bills, and potentially make more money. If you guys, I don't have time to go back to it. That's why I told you to take a picture on your smartphone, but we'll send you out the recording as well. So this course is great. If you only trade futures and Forex, guys, this course is not for you. Okay, so this is someone who trades options and or stock and wants to learn a new system and a new trading plan by a proven strategy. Okay, this is how I've been trading, and this is how I've been profitable throughout the years. A trader who wants to actually learn how to trade and stop guessing. So many people are guessing about trades. Okay, I don't create my own trades. I just watch for the better and smarter traders to put on positions, and I mimic their positions. Anybody who wants to master unusual option activity and learn how I've made millions of dollars in my trading career, trading this exact same route and approach. And that's not, making money and losing it back. That is net profits throughout the year. Things I guarantee about this course, okay? We have a 100% money back guarantee. If you buy the course today and do not like it, we will give you your money back. We do not want your money if you're not learning, okay? So there's no reason not to take advantage of this because we will give you your money back if you're not happy with the course. We're going to sell 17 spots, and after that, the price goes back up to $497. It is 80% off. We have 13 courses at alphashark.com, and this is the best course we have. So let me teach you what you guys are going to learn at the course, okay? So this course is $97. You guys can sign up at optionsonthefloor.com/last, okay? Well, I guess we have 25 spots. The Unusual Option Activity Trading Plan Workshop, it is on demand. So the minute you pay for it, you can start learning immediately. What we'll teach you in the workshop, it's about a 4-hour workshop plus 4 hours watching me trade live. Learn why call buying is not always bullish and put buying is not always bearish. Master how to read options volume versus open interest. Why stock volume is very, very important. Train how to differentiate between speculative option orders and those placed to hedge a bet. Plus, you will get 1 hour of watching me trade live in a bonus session. And this is available for you guys all for only $97. Like I said, guys, number one, 100% money back guarantee. So if you guys are not satisfied with the course, we will give you your money back. Number 2, this course is on demand. The minute you pay for it, you can start learning immediately. Number 3, out of our 13 courses, this is the best selling course that we have, unusual option activity. And number 4, which is most important, we're going to give you guys an extra hour to watch me trade live. So you guys can go through the course, you can come up with a list of questions, and then you guys can come and watch me trade live in a bonus session where I'll be trading with the scanner out, talking about unusual option activity throughout the course of the day. So make sure you guys sign up. I see my inbox and people are taking advantages already. I see Barbara's in, I see James is in, I see John is in, I see Jack is in. And make sure you guys take advantage because we have limited amounts of spots. optionsonthefloor.com/last. Does anybody have any questions about this? Otherwise, we can look at some charts. Is there a site to practice option trading with live markets but not real money? You fucking go higher. As a counter trend trader, if I thought Twitter was going to go higher, I could buy Twitter with a stop under the lows. So actually, Twitter's finally starting to get a little buying pressure. So 1548 would be my stop level. Any other charts you guys want to see, just fire them out there. Someone was asking me about Tyco earlier. Tyco's getting acquired. I actually had a really nice day today in Tyco. I has launched some April 34s. Tyco getting into the cloud here. Let's look at the S&P 500 futures on the daily chart. So on the daily chart today in the S&P 500 futures, actually, we did make a higher high and a higher low. So this is actually a bullish day. A higher high and a higher low here on the daily chart here in the futures. GLD. Tiffany's shirt. So gold here is in the Ichimoku cloud here. So I think gold is it's neutral. It would have to break the cloud to the upside for me to want to get long. Starbucks reported earnings. It came right back on earnings. It traded down to I think about 57, 56 and a half in the after hour session. Technically it's still bearish. It is under the Ichimoku cloud here on the daily. Let's go to Tiffany's. I think you can open an account through Thinkorswim, and you guys can get it. I mean, Tiffany looks like it's going to take out the lows. Actually, Coach reports earnings today. We've seen bullish activity in the option market, so it's possible that Tiffany's might move up with Coach, but it's straight down. We do have a decent tail on the bottom here, so it's possible that the lows are in here for Tiffany's, but I think it goes lower. So let's talk about this workshop one more time, and then I'll give you guys on to our next presenter. A lot of great presenters today. The number one thing when you're trading, guys, is you have to be willing to invest in your education. If you're not willing to invest in your education, you're never going to get to the next level of trading. It's like saying, hey, I want to lose weight, but I don't want to go to the gym. I'll go to the gym when I lose weight. So you guys got to be willing to invest in your education. This is a great, great course for you guys because we give you that 100% money back guarantee. So what you will learn in the Unusual Option Activity course on demand is learn why call buying isn't always bullish and put buying isn't always bearish. Master how to read option volume versus open interest and average stock volume. Train how to differentiate between speculative orders and those that are hedged. Okay. Also, we're throwing in that 1 hour live watching me trade live bonus session. So we're going to give you guys plenty of time where you can go through the course and then you will be able to watch me trade live. 4 things I will say, and I'll let you guys go to the next speaker. Number 1, 100% money back guarantee. If you guys do not like the course, I do not want your money. Number 2, 25 spots. My inbox is blowing up, so we have less than that right now. Number 3, we will 100% sell out. We sell out of almost every single course we offer. It is on demand, so you guys can start learning immediately. Number 4, this is great for a beginner, intermediate, and expert trader. So thank you guys so much for having me. Hopefully you guys learned a lot. Make sure you guys take advantage of this course, optionsonthefloor.com/last. Thanks guys and have a great day.